Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
St. Patrick's Day, March 17th. S&P 500 opened up about 0.5% higher. The Dow and the NASDAQ about the same. The Russell 2000, a little more outperformance. The VIX, the volatility index, the sphere gauge is sliding down to 22.3. When it hits around 28, that's when the market is afraid and there's more of a sell-off. When it's below, in this 20 range, it can easily have a market day go higher. Of course, a lot ties into it. What's Bitcoin doing? What's 10-year Treasury? 10-year Treasury sits at 4.19%. That doesn't seem to be headed for sub 4 anytime soon. Bitcoin up 230, sitting at 74,121. Bitcoin's been on quite a nice run recently. Sees 8 consecutive days of gains, a streak not seen in 4 years. Cryptocurrency has generated 8 straight days of positives. Bitcoin climbed from below 66,000 on March 8th to over 75,000 yesterday before settling in right around 73,800. Oklo is surging today after receiving approval for its next phase in the construction of its first nuclear reactor. Ticker symbol OKLO. They announced that they signed an other transaction agreement, an OTA, with the Department of Energy. This is Oklo's first NRC-issued license, which is the Nuclear Regulatory Commission. Energy Secretary Chris Wright was formerly a board member at Oklo before he was tapped to lead the Trump administration's Department of Energy. That's interesting. Morgan Stanley thinks Tesla's Terafab could cost an additional $35 billion to $45 billion in CapEx. Crazy. CEO Elon Musk is going to launch the Terafab, I think, this week. He announced it a few days ago and said, next 7 days, I'll tell you more. The company wants to reach the long-term goal of producing 100 million humanoid robots annually. It could require more than 200 million chips a year, over 50 times its current demand. So says Morgan Stanley. Morgan Stanley also says the CapEx for the facility could reach 35 to 45 billion, including construction costs, and roughly 20 to 25 billion for wafer fabrication equipment alone. This is not included in the sizable $20 billion CapEx budget for this year. Morgan Stanley semiconductor analyst described the effort as a Herculean task, noting the difficulty of building leading-edge chip capabilities from scratch. Tesla's most expensive factory to date, the Nevada battery plant that it began building in 2014, estimated to have cost about $10 billion over time. NVIDIA keeps giving Wall Street everything it wants, except for a promise that those margins are going to stay at 75% forever. Jensen repeatedly said the chip designer is both vertically integrated, that is, offers all solutions you need, not just GPUs. They're building racks, data center racks. They've got the software. NVIDIA clarified that its $1 trillion guidance applies only to the sales of Blackwell, which started shipping in fiscal quarter 2025. No matter how you want to slice it, its implications for total revenue through calendar year 2027 is unmitigated thumbs up relative to consensus expectations, but it's the margins that people worry about. JP Morgan called NVIDIA to overweight with a $265 price target after the conference yesterday, after the keynote at the conference. Some of the quotes that came out: NVIDIA's Grok 3 LPU integration with Vera Rubin was the most architecturally significant product announcement. A disaggregated inference architecture that pairs Rubin GPUs, which have high throughput, with Grok LPUs, which have low latency decode, and positions NVIDIA to effectively service the low latency inference market, where ASICs, application-specific integrated circuits, have traditionally held an advantage. Bernstein's Stacy Rasgon calls NVIDIA an outperform with a $300 price target. NVIDIA's full platform approach appears increasingly difficult to disrupt as they relentlessly build out their software and hardware stacks across multiple offerings, including GPUs, CPUs, DPUs, LPUs, networking, and storage. and continue to drive token costs down by orders of magnitude with every generation, which could allow them to capitalize as inference computing. Frankly, we see this increasingly wonder how anyone is going to compete with them. Okay, so Bernstein, $300 price target, says basically no competition. And we all know Dan Ives. He calls NVIDIA an outperform $300 target. Inference has emerged as a dominant demand driver with the GB200 NVL72 delivering up to 50 times performance per watt and 35 times lower cost per token compared to Hopper, making it the clear architecture of choice for enterprises scaling agentic AI workloads. So what was that? One $265 target, two $300 targets. And NVIDIA is trading today at 182. Keep in mind, it does have that big number problem, and it's going to continue to have that big number problem. And one thing that I hear analysts talk about as a negative on NVIDIA, it's not competition. It's not the CapEx cracking. Who's going to crack first? Will it be Meta or Amazon or Oracle? The big question mark is their margins are so good. They make so much money on the product that they sell. Let's talk about some things that are out there. Some of it in tech, some of it not. Delta's boosting airline stocks today after lifting revenue guidance. We are heading into spring break. I hear spring break's going to be nasty for travel. Just not enough. In the security line, taking hours to get through. You would think that the airlines were cutting guidance. Delta's betting its operational excellence and strong travel demand will help blunt the effect of fuel prices, a major expense for the airlines. Delta did a presentation yesterday. It said that they've captured 55% of total industry earnings last year, with premium revenue more than doubling over the last 10 years to $22 billion. And its highly profitable American Express credit card remuneration is on target for a $10 billion goal. Qualcomm's up higher today. They announced an aggressively large buyback. They almost have to at this point in time because people aren't giving them enough credit for their excellent semiconductors. It's just there's so many excellent semiconductors out there. It's tough to get the attention. Qualcomm's going to buy back $20 billion in shares and boost their dividend. Let's take a quick look at the year-to-date chart. The year-to-date, wow, oil's up 70% year-to-date. Gold and silver up 15 and 16% year-to-date. Then you start looking at the Dow down 3%, S&P 500 down 2.3%, NASDAQ down 3.7%, Russell 2000 basically just fractionally down. Bitcoin down 15%. It was down 20% just a couple days ago. It's made a big move back. I would say the markets are handling this pretty well. Now, the longer it goes on, the more likely that the lower wages in America get hurt by the high price of oil and gasoline costs. The high price of oil will bleed into plane tickets, gasoline, manufacturing costs. Companies that manufacture will eventually raise prices. Inflation's going to be a thing if this stays around. Now, again, I'm still almost 100% invested. So I'm not calling for the sky is falling. President Trump seems a little desperate. He wants any nation's help to open the Strait of Hormuz. Fed decision on Wednesday is seen as a near certain hold. Elizabeth Warren is asking Meta, Amazon, hey, why are you guys laying off workers despite getting big tax perks from the U.S. government? Dollar Tree shares up 7% yesterday after posting strong sales growth. Wedbush raised its price target on Micron from $320 to $500. Let's hit a little bit more on NVIDIA because I know it's a widely held position. 2.5 hour keynote yesterday. That took a long time to get through. Street's expecting NVIDIA to grow about 30% for 2027. They expect it to be about 40%. Another big key takeaway was that tiered pricing on tokens will become more pronounced given they claim to be the inference king, with Grok powering the smartest tokens that users will pay for. Third thing, the continued expansion of the business. They're a platform and will ride multiple waves of AI, including physical, which is good for long-term growth. All software companies need to become agentic, suggesting multi-year challenges and big opportunities for current software as a service companies. In the last 12 months, NVIDIA is up 50%. One of the areas where he brushed off the bear case in the AI trade, he was talking that hyperscale spending not falling off. And the ability to get CPUs and GPUs and LPUs, to get all the PUs to the hyperscalers, they're going to fall short, and yet they're going to meet every piece of demand that's there. The Magnificent Seven as a group has shed more than $2 trillion in market cap since peaking last year and now hovers around 14% below record highs. Eli Lilly got a downgrade from HSBC to sell from hold. Analysts are reducing their medium-term sales forecast for the GLP-1 market and arguing the stock is priced to perfection. It's interesting. Some analysts don't see how big the GLP-1 market could be, and some do. It's almost a civil war. Novo Nordisk seems to have the wrong future pipeline of drugs. Eli Lilly seems to have the right future. But there's companies, like I mentioned yesterday, that could be acquired and put Merck in the driver's seat, potentially. I highly expect that we will not be taking injections for GLPs in probably about 2 to 3 years, from what I'm reading. Citi is cutting their price target on Lennar after the home builder's earnings report made clear the housing market is still weak. Price target went from 113 to 104. Without rate cuts, this group of stocks is the wrong trade. Since the Iran war has broken out, mortgage rates have been creeping higher. They had been creeping lower, which made you bullish on the home builders. I don't own any home builders other than what might be found in indexes. Argus downgraded DraftKings to hold from buy, worrying about a higher cost to acquire customers, increased state taxes, and competition from prediction markets. Let's talk a little bit about prediction markets. For the Academy Awards, total amount wagered on the Oscars surpassed $300 million. Best Picture contract was $39 million of deals between Kalshi and Polymarket. It's a lot of money. Texas Instruments is in the news today. Tori Schwanberg commented at Stifel, says, "We remind investors that Texas Instruments reorganized its reporting in fourth quarter 2025 to establish data center as a standalone segment, now representing 10% of total revenue. The segment exited 2025 with a $450 million quarterly run rate, totaling $1.6 billion for the year, up 64% year over year. With AI infrastructure demand accelerating, we are currently encouraged by the unveiling of Texas Instruments' 800 power solution portfolio. In our views, combined with NVIDIA's physical AI collaboration, Texas Instruments is favorably positioned to capture multiple high-growth secular verticals via its expansive semiconductor roadmap." TXN, if you want to take a look at Texas Instruments. And an analyst at Needham is talking about Amazon today. Her name is Laura Martin. And with Amazon, she says, the most common generative AI-related bear case we hear about Amazon is that consumers may ask AI shopping agents to find and buy the best running shoes under $150, essentially bypassing Amazon. We disagree, since Amazon owns the largest product catalog, fulfillment network, pricing data, reviews, consumer purchase information, and merchant relationships. AI agents will become an additional source of demand, feeding Amazon's back end. Aiding its revenue growth, we also believe that Amazon Web Services will take a fee, just like Apple, from every LLM and generative AI company it hosts, driving accelerating revenue growth, higher return on investments, and revenue diversification for Amazon. We believe federal court judge granted Amazon a preliminary injunction to block Perplexity's AI agents from shopping on Amazon. So they had a whole note on research on it. I really thought that was interesting, that if you want to host your agent on our Amazon Web Services and your agent does a deal, we're going to get a piece of that action. There's a lot of money to be right in who wins the AI build out. And that's an example of people aren't thinking this way. Let's take a break here. We'll come back, have some more content, run some more show. I'm Rob Black, talking all things financial, money investing, and more.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Markets have been open now for a few hours. And I just did my TV spot. And I would say, again, resilient seems to be the word. We have a strong economy. We've got contained inflation. We've got strong corporate earnings. A lot of analysts are saying, when are the experts going to lower the expectations for their 2026 S&P 500 earnings? And so far, no one's really budging. Days got a little bit weaker. We opened up about 0.5% on the S&P Dow and the NASDAQ. Now they're up about 1/3%. Gold is wavering right now as traders weigh inflation risks and the oil supply shock. It is a tough market. And gold has had such a big run. When I say it's a tough market to predict how everyone's going to respond. Just when it looked like Bitcoin was going to break down completely, it showed a nice rally. Just when gold looked like it was going to rush to 7,000, it paused. Uber is going to invest $500 million in Argentina over 3 years, their economy minister says. Warner Brothers CEO is going to receive up to $887 million if the Paramount deal closes. That's a lot of money. That's a ridiculous amount of money. I don't like it. When it becomes absurd, it becomes unlikable. For me. I'm going to get back to Lyft and Uber and Nvidia and Tesla in just a second. There's some sentiment on Wall Street called the frothy bull. And no, it's not a beer drinking bull. It's tied towards how much money can flow into the markets. Big brokerages and banks like Bank of America, they track fund managers, and they showed a jump in cash levels to 4.3% in March from 3.4% the prior month. 3.2% was a record low in the first month of 2026. So people are raising cash. That's the biggest retreat from the market since March of 2020 when a COVID-induced market panic set in. The good news and the bad news is the bad news is you're assuming they're thinking something bad's going to happen. The good news is there's going to be more cash on hand coming back into the market down the road. Space, drones, and satellites. This is the first Gulf War strike that we've talked about drones and satellite systems and space stocks. Intuitive Machines, ticker symbol LUNR, Planet Labs, PL, Redwire, ticker symbol RDW, Rocket Labs, RKLB. They're outperforming the stock markets or the indices. There's a lot of news, headline news, covering these stocks like Rocket Labs and Firefly Aerospace, Tesla. So how comfortable are you investing in space, satellites, and drones? Off the planet business models. Companies that have native drone and satellite technology cultures like AeroVironment, ticker symbol AVAV, and Rocket Lab, ticker symbol RKLB, find themselves particularly well positioned, so says Goldman Sachs. And in Europe, a remilitarization of the continent is underway that could require a $160 billion investment over 5 years just to catch up. A little bit more on that Eli Lilly, because I know a lot of people have that as their growth stock that isn't a tech stock. So they got a sell rating today at HSBC. The analyst cut his rating to reduce from hold, cut the price target from 1,070 down to 850. Stock's currently at 989. The quote on it was, "We think Lilly shares a price for perfection and are uncomfortable with working capital trends and think medium-term earnings trends are optimistic." They're the only analyst that has a sell rating on Lilly. 38 other analysts cover the stock. The company's rallied more than 20% in the past year as its obesity drug continues to pay dividends. But the space is increasingly crowded with smaller companies developing their own GLP-1s. Lumentum and Coherent stocks are on a wild ride. They've been recently talked about over at NVIDIA. So everyone's trying to say, okay, we see $1 trillion coming into the NVIDIA world. How much of it's going to spill over and land in the coffers of companies like Lumentum and Coherent? They make optics, lights. You might remember back in the late 1980s, AT&T started replacing the phone systems. The plain old telephone systems called POTS, copper wire, with fiber. And Tom Selleck, who was of Magnum PI, big strong man, big mustache, easy to market. He was talking about the future of AT&T, and one of the things was, conversations traveling on light. Well, light doesn't heat up to the scale in optics. So companies like Corning and Applied Optoelectronics, they're players, but the big co-packaged optic companies right now are Lumentum and Coherent. Now, copper's still important. It's going to be the dominant configuration for scale-up purposes, connections within a single server rack through at least 2027. But they're going to start seeing more of a scale out into optics. Amazon is rolling out 1 hour and 3 hour delivery as ultra-fast shipping trend grows in the United States. Amazon is rolling out the 1 and 3 hour delivery. Wow. Company is speeding up deliveries even further after investing significant money and resources to make same-day shipping the standard. It has experimented with ultra-fast delivery through a variety of programs over the years. They talk about their customers being busier than ever. And yeah, there's definitely a math on it, huh? I could load up my truck with 2 loads of trash to take to the dump, or I can call 1-800-GOT-JUNK and spend $200-300 on it. It's not that expensive, and my time is worth something, and I'm going to be spending close to that in dump fees. Convenience is where Amazon does well. Prime Now, fast delivery service. 30-minute deliveries of household essentials and fresh groceries with a program called Amazon Now. They got Prime Now, Amazon Now, so their whole thing is now. Amazon's been working for over a decade to launch drone-based deliveries in an hour or less, initially launching the service in 2 small test markets. It has expanded into several cities at this point in time. One of the big announcements that came out yesterday was on NVIDIA. And talking about making a partnership with Uber and Lyft, positioning themselves as the technical backbone to future robotaxi fleets. We've known about it. We don't get a lot of press releases about it, but NVIDIA's got a Drive Hyperion autonomous vehicle platform that they're now going to be putting that into 5 vehicle companies they announced this week. Uber expects NVIDIA's powered Level 4 robotaxis to launch on its platform in Los Angeles and San Francisco in 2027. They hope to scale that to 28 cities globally by 2028. Zoox has relied on NVIDIA's tech for its purpose of building autonomous vehicles since 2017. It's currently testing in 10 markets. All of this equals pretty bad stuff for Tesla and the robotaxi shtick. Tesla has been saying, look, we build the cars, we have them. We're not putting, it's all concentrated. And now you're starting to see companies like Jaguar and Geely, Toyota, Hyundai, Volkswagen, Lucid, and Stellantis all partner with maybe a tech partner. So the way I look at it, robotaxi companies, there's two of them right now, Zoox and Waymo. Then you get into platforms. Platforms are Via, Lyft, and Uber. Then you get down into autonomous technology. And this is Mobileye, May Mobility, NVIDIA, Nexar, and Avride, which is also known as Nebius, a company called Nuru. Then you get into vehicle makers, and they have a play, like I just mentioned, Jaguar, Geely, Toyota, BYD, Hyundai, Volkswagen, Lucid, Stellantis. Then you have fleet management like Avis and Move with two O's. There's a lot of competitors here. Tesla just reported another accident yesterday. President Trump just got out of a press release. He says he has great support from the Middle East, Qatar, Saudi Arabia, UAE, Bahrain, essentially no support from NATO allies. NATO is making a foolish mistake. We don't need them, but they should have been there. Not good for partnership, if not going to help. Strait of Hormuz, President Trump says, won't be too long before ships can go through. China, President Trump says, we have a good relationship with China, much different than it was in the past. Looks like China meeting will take place in 5 weeks. On Cuba, Trump says Secretary Rubio is talking with Cuba and will be doing something with Cuba soon. Rubio also notes that they have non-functioning economy in Cuba at this point in time. Delta reiterated their guidance and increased their expectations for revenues, whereas Southwest just said our guidance still looks good. A little bit of confidence in the quarter. Academy Sports and Outdoor tumbles on fourth quarter miss. This is a place where you can buy sporting goods. Dick's Sporting Goods is the one to buy if you wanted to buy one. I think Walmart may make a better longer term investment, but Dick's is great. They've done a very, very nice job, especially in cashing in on those torpedo bats in baseball for youth sports. But ASO, Academy Sports and Outdoors, it's a player. It's just not the player that's winning. I think it underscores the importance of scale, brand relationships, experiential retail. When you go into a Dick's Sporting Goods, you can actually get in a batting cage with a bat. Consumers are becoming more selective in their discretionary spending. Longer term, maybe it's a stock you look at because Americans love our outdoor sports, and I can't believe what I spend on my kids in sports. Microsoft is going to move to streamline the Copilot structure, unifying AI efforts across consumer and enterprise. And Microsoft is trading a big discount. That whole software is a service apocalypse. SimTech delivered a respectable quarter, but good wasn't good enough. Guidance for the first quarter was encouraging. Investors appear concerned about whether growth can reaccelerate meaningfully in the near term. The company remains well positioned in a critical part of AI and data center build-out, particularly around power-efficient, high-speed optical interconnects. The HiFO acquisition looks strategically sound and could materially expand SimTech's content opportunity as architectures move towards 1.6 and 3.2T. Still, with growth slowing and consumer sentiment tied closely to execution in the data center cycle, the stock may remain under pressure until clear signs of reacceleration begin. Have a good and safe St. Patrick's Day. We are moving into spring. Snow's melted, weather's warming. Oscars were on Sunday. 2025 is deep in the rearview mirror. Major retailers are going to start rolling out their summer items. I think the consumer will still act stretched from a household budget standpoint, but will still spend. Retail sector scorecard has winners more often than not. Total earnings for the sector were up 6.9% from the same period a year ago. 77% of retailers outperformed revenue estimates. Trader Joe's. What's up with the bell ringing? The supermarket chain itself does really well with customer satisfaction. They earned a score of 86 out of 100 in the retail and consumer shipping study. That's up from 84 in 2025 when Trader Joe's tied for the highest rating with Publix. This year, Publix, holding steady at 84, placed second. Sam's Club is fourth at 82 rating. I don't even think I brought this up, but Disney's Bob Iger, his era is over, turning over power in the company. He'll stay with the board and with the company through the end of the year. Just found some research on a company called Swarmer. It's a drone autonomy software company whose technology has been used in Ukraine. Stock is up massive, ticker symbol SWMR. They make the software so it enables drones to swarm and helping operators control hundreds of drones simultaneously. Sales are exploding. Wow, can you invest? Can you? How do you feel about investing in battlefield technology? I'm always looking for stocks to buy. If you have any ideas, drop me an email, rob@robblack.com. Even just good stories. I think two of the more interesting stories, and I'm talking like story stock here, would be MasterCard. They're acquiring stablecoin startup BVNK for $1.8 billion, betting on future of payments. BVNK was founded in 2021 and recently valued at $750 million, operating across 130 plus countries on all major blockchain networks. The acquisition gives MasterCard, the world's second largest payment network behind Visa, the ability to connect traditional payment rails with emerging blockchain-based systems. This is going to allow MasterCard to enmesh itself in payments systems involving stablecoins and tokenized deposits as they gain adoption in the coming years. Visa's not sitting quietly today. They now have 17.5 billion tokens in circulation, more than 3 times the physical cards on its network. Tokens replace card numbers with unique digital substitutes to secure online and mobile transactions. Visa's tokenization can boost approvals and reduce friction in subscriptions and cards on file payment. The company now has more than 17.5 billion tokens circulating, like I mentioned. Instead of transmitting sensitive card data, tokenization generates a unique digital substitute that can only be used within a specific transaction or merchant environment. The benefits extend beyond fraud protection. Tokens can boost transaction approval rates and reduce friction in repeat purchases. Innovations such as automated purchases, embedded finance, and AI-driven shopping experiences increasingly depend on secure programmable payment credentials. Some of Visa's competitors in the value-added services include, obviously, MasterCard and American Express. We've started to hear about AI layoffs and how companies are starting to adopt AI and essentially lay off people, addition by subtraction. Meta stock was up 3% yesterday on news that there's reports that it's weighing layoffs of up to 20% of the company. A company called WiseTech, a logistics software maker, their stock was up 12% after cutting 2,000 or 30% of its staff. Back in late February, Jack Dorsey, his company Block skyrocketed 17% after cutting 4,000 or about half of its staff. Now, here's what they don't tell you. Meta stock is still fallen more than 20% from its highs. WiseTech is down 60% from its highs. Block is 26 below its 2025 highs and has given back about 6% of that post-layoff gain. It's not the holy grail that we thought it was. AI won't necessarily boost your stock for a period of time. Stay with me. I'm Rob Black, talking all things financial.
For more information about EP Wealth, visit robblack.com. That's robblack.com.
NVIDIA CEO Jensen Huang at the GTC conference said a lot of things today. I'm going to try to sum up what I can for you. The quick summary is that he now sees at least $1 trillion of revenue by 2027. Wow. Last year at the same conference, he said $500 billion for Blackwell and Rubin by 2026. Lots of customers are looking for accelerated computing. Robotics will be a $50 trillion industry. There's 110 robots at the show this week. Domain-specific libraries will be key to solving problems across various verticals. Companies at the beginning of a new platform shift. Computing demand for GPUs is off the charts. Companies more and more so keep saying that they need more computing and tokens. Computing demand has increased by 1 million times in the last 2 years. So what else did he have to say? NVIDIA's annual developer conference. He took the stage to a packed house. He said he expects purchase orders between Blackwell and Vera Rubin to reach 1 trillion through 2027. Can you imagine? Go break that number down. And your mama would be proud if you started that business. Following NVIDIA's earnings report last month, finance chief Colette Kress said the company expects growth this year to exceed what was included in that estimate. Jensen said that demand is booming from startups and big companies alike. NVIDIA shares rose about 2% today. It was higher, but it pulled back. And for poops and giggles, I looked at the last 4 GTC conferences. Stock didn't go up on any of them. It moves stronger, higher usually after earnings. If they could get more capacity, they could generate more tokens. Their revenues would go up, Jensen said at the conference today. He said demand's booming from startups and big companies. NVIDIA's GPU, graphic processing units for artificial intelligence, have turned the brand into a household name and the most valuable public company in the world, worth about $4.5 trillion. NVIDIA is scheduled to roll out Vera Rubin later this year. The system, which is made up of 1.3 million components, will deliver 10 times more performance per watt than its predecessor, Grace Blackwell. That's a significant development when energy consumption is one of the most critical issues facing the AI build-out. Jensen unveiled the NVIDIA Grok 3 language processing unit, or LPU. It's the company's first chip from the startup that it mostly acquired through a $20 billion asset purchase in December. NVIDIA's had 11 straight quarters of revenue growth above 55%. He expects revenue this quarter to surge about 77% to $78 billion in the quarter. Grok was founded by the creators of Google's in-house tensor processing unit, which has gained traction in recent years as a competitor to NVIDIA's graphic processing units. The Grok 3 LPU is built to enhance its technology with one core optimized for speeding up the GPU. Jensen showed off a prototype of Kyber, NVIDIA's next big rack architecture leap after Rubin. It's going to integrate 144 GPUs in a compute trays. They sit vertically instead of horizontally in order to boost density and lower latency. This is some crazy technology. Crazy fast, crazy good. Jensen says cloud customers are growing. Just be patient with us. Our relationship with cloud service providers are essentially us bringing customers to them. He added that cloud service providers love working with NVIDIA because of this. And I just want to let you know there are a lot of customers. We're going to accelerate everybody. And so there will be lots and lots of customers who will be able to land in your cloud. Just be patient. What else blew up in the grenade of announcements today? Memory stocks, such as SanDisk, Micron, and disk drive makers like Western Digital and Seagate, they sprinted ahead. This week's big AI conference for tech bellwether NVIDIA gets underway, and those stocks go higher. I had to look up a word to see if I was using it correctly. Speechifying. Jensen's speechifying at high-profile company announcements or industry events hasn't always been a good thing for NVIDIA. The chip designers holding its GPU tech conference, I told you the last 3 or 4 times they've done them, hasn't really moved the stock. He's fun to watch, and if you haven't watched it, it's on YouTube. His keynote. Show it to your kids. Maybe they'll get better at math and science. Memory stocks have been the highest profile outlet for the AI industry impulses this year. Micron had an announcement yesterday that it completed its acquisition of a new manufacturing site in Taiwan. Memory stocks are pushing higher after having exhaled a bit lately. Again, those names are SanDisk, Seagate, Western Digital, and Micron. Apple's in the news today. They acquired video editing company Motion VFX to boost subscribers. The Polish startup has tools that work with Apple's Final Cut Pro editing suite. The acquisition will help Apple attract more subscribers to its recently announced Creator Studio bundle. That seems like a shot at Adobe. From the very beginning, it's all about ease of use for Apple and their software. So Apple's going to be competing with Adobe Premiere Pro, trying to add subscribers as it continues to lessen its reliance on devices. Apple's services business, which includes subscriptions like iCloud, Apple Music, and app bundles, generally have higher profit margins than hardware like iPhones. Apple introduced a bundle called Creator Studio, which packages popular creative apps like Final Cut Pro into a subscription for $12.99 per year or $129 per year. $12.99 per month. That's what I meant to say. 15. Let's do the Johnny Carson game. 15. What do you think 15 is in reference to? That's the number of accidents coming out of Tesla's robotaxi program. A firm reported today that the National Highway Traffic Safety Administration that Tesla's crash in full self-drive mode every 57,000 miles, about 9 times the rate for humans. The latest crash involves a Model Y hitting a fixed object at 9 miles per hour while the autonomous system was engaged. Humans are very much still involved with Tesla's so-called autonomous driving service. Despite announcing in January that the service had started removing safety monitors from the front seats, only 2 unsupervised vehicles have been spotted in the last month. The entire fleet has also dwindled from about 50 vehicles down to 35. Not getting a lot of information on Tesla's robotaxis. Bill Gurley with a U, he got on CNBC this morning. I kind of like this guy. He's general partner at Benchmark. He said he sees artificial intelligence reset coming. He says bubbles only exist when the actual wave is real, and the AI wave has made a lot of people rich quickly. Gurley's firm was an early investor in Uber, and he helped oust then CEO Travis Kalanick in 2017. Travis Kalanick just gives me the creeps. He's one of those CEOs that just whenever he talks or executives just ugh. Gurley referenced the work of Carolta Perez, an economic scholar who wrote Technological Revolutions and the Financial Capital, The Dynamics of Bubbles and Golden Ages. He noted that bubbles only exist when the actual wave is real. The venture capitalist said that when the reset happens, investors should have a price in mind for beat down software as a service stocks and start gobbling them up. AI is threatened to disrupt segments across the economy, but software stocks have been particularly hard hit. He's liking that sector. Salesforce and ServiceNow have each lost about 25% so far this year in 2026. Let me check to see what year it is, Cinder Rumpelstiltskin. Tech companies are spending at record rates due to massive investments in the AI infrastructure and soaring memory costs. AI spending for Amazon, Meta, Google, and Microsoft is projected to be about $700 billion this year. Benchmark was an early investor in Uber, and Gurley played a key role in the exit of then CEO Travis Kalanick. Gurley said, God bless them. When speaking of AI companies like Anthropic and OpenAI that are burning through cash, he says that's a scary way to run a company. He called Uber's cash burn rate of $2 billion during his involvement high anxiety. I agree with that. And that's one of the reasons Meta is potentially, underline potentially, cutting 20% of their workforce. Because they'll save about $5 to $6 billion. And we kind of got a hint of that last couple quarters ago when Mark Zuckerberg on his earnings call talked about the need for engineers at Meta to continue to use AI and boost their productivity. Implied threat if you don't. This was a big weekend for wealth management professionals. They just ended on Miami Beach for a big conference called Future Proof. A lot of speeches on AI and whether or not it's going to destroy the industry or transform it. Interviews at the conference with advisors, executives, and fintech founders suggest that the surging interest in adopting AI tools and a dose of trepidation about how the same tools may upend work habits and client preferences. I don't know about you, but we're living in fun times. I believe. You can always find me online at robblackshow.com. That's robblackshow.com. Have a question? Drop me an email, rob@robblack.com.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.